300 points downtick that we saw early in the trade. On the other hand, what is contributing to the Nifty's up move at this point of time is your Bank Nifty index, because that seems to be doing well with about 0.1% gains. Other than that, we can see FMCG index once again holding well, 0.3% gain coming in. Nifty Pharma index looks like doing well given the Glenmark Pharma deal that we had yesterday. So pharma stocks have been buoyant on the back of that. PSU banks, private banks, both of them holding well in this market. However, what seems to be not doing well, that is your autos, IT index, and of course your oil and energy and realty stocks also seem to be on a downtrend. But yes, let's move on to our next guest of the show. We have Kranthi Bathini, equity strategist at Wealth Mills Securities, joining us. Kranthi, we have the TCS first quarter results. What is your first assessment that is coming in?
Yeah, Lavisha, good morning to you. The bellwether company, the TCS results, by and large, seems to be disappointing to the market. But we need to see, of course, we can understand there is a looming uncertainty around the globe, and the management commentary is cautious, even though they are sanguine about the coming FY26. The medium to short term outlook can be challenging, and the turbulence, that's what we can sensing at this point of time with respect to TCS is concerned. But how the improvement in the global economy, and also especially the US trade war uncertainty, and also the company budgets are concerned, that's going to be the overhang on TCS in the medium to short term. But given the kind of the long-term outlook of these companies, and also the strong business model this company carries, any dip in TCS for a longer-term perspective, definitely investors can add in a very staggered manner. There might be challenges for next couple of quarters, but the long-term outlook can be sanguine with respect to TCS is concerned, given the kind of strong business model the company enjoys.
Okay, all right. All right. So what is the overall earnings growth expectations that you have from large caps versus mid caps universe this season, Kranthi?
Yeah. With respect to the earnings outlook is concerned, Lavisha, we are quite positive with respect to the mid-cap stocks are concerned, because the last FY25 mid-caps have shown its resilience despite of some kind of worries or some kind of valuation concerns. By and large, mid-caps have shown its strength with respect to the earnings are concerned. And also when we interact with many of these mid-cap companies, they're quite optimistic with respect to the earning outlook for next couple of quarters and also the coming years. That's where mid-caps could able to sustain in this market consolidation in the past couple of quarters. But by and large, what we can expect going here is we are going to expect a stock specific action as and when these till the time the trade worries still going to be overhang on the market in the medium to short term. So that's the reason we are going to see stock specific action in the mid and small cap space. With respect to the large cap space is concerned, we can see some kind of a uptick on a year-on-year perspective with respect to the large cap space is concerned. But there are certain pockets in the mid cap looks promising in the medium to short term.
Okay, Kranthi. Do you believe that this earnings growth that we're expecting from the first quarter is enough to fuel the markets higher? Because everyone has been chasing for Nifty to clinch that all-time high levels.
We are just cautiously optimistic with respect to the large cap outlook of the earnings with respect to the Q1 is concerned. There can be a sectorial rotation. That's what we are going to expect. The IT, which carries significant weightage with respect to the Nifty is concerned, that's going to have some kind of a pressure in the medium to short term. But we can expect some kind of improvement with respect to the banking and power. These are the sectors looks promising at this point of time, and capital goods also looks promising in the medium to short term. So these are the sectors that are going to lift the Nifty earnings, but IT can be the dragger in the medium to short term, given the kind of global uncertainty what we are witnessing at this point of time.
Kranthi, you mentioned that IT is a heavy weightage. The other pocket that is there, that is your banking index. So from the first quarterly updates that we have been seeing, they indicate that there is a sluggish loan growth and margins could be under pressure because the rate cuts could translate into repricing of loans on a lag basis. So what is your assessment from a banking sector? Can we expect it to drive the market rally, or it could be subdued for this quarter?
Loisha, markets are always forward-looking. So, in terms of the rate cut cycle, what we started, we can expect the credit growth to boost further. That's where the banking and financial services take the edge, rising their earnings in the next coming quarters. So that is the reason any dip in the banking stock, it can be private or public sector banks are concerned. It can be the mid and small cap, and even the large cap banks also looks attractive to us. It's going to be more stock specific. So banks are looking attractive at this point of time, given the kind of credit growth that's what we are going to see, and also the demand that's taking place, rural as well as urban, and the cooling of inflation that's going to benefit the banking and financial sector in the medium to long term.
Okay, okay. You also mentioned that you are bullish on the capital goods space. I want to understand, because the private capex is still not picked up yet. Would you suggest that investors should stay a little cautious on the counters from at least the medium term perspective?
Lucia, in a medium to longer term perspective is concerned, again, we have the budget, and also given the kind of infrastructure thrust we are witnessing, and also the defense, one of the high performing sector. So these are all the components that's going to have some kind of a positive impact on the capital goods space is concerned for a medium to longer term perspective. So investors with a long term horizon, definitely any dip in the capital goods, one can add in the medium to longer term perspective. And also engineering is the space looks very attractive to us. The key sectors what we are looking is at this point of time, we call it as a DCP. Okay, defense, capital goods, and power. These are the sectors we are looking forward. There can be stock specific action that's going to be there in these sectors.
Okay, okay. Defense pockets, yesterday we had a note by Motilal Oswal. They actually pointed out on Bharat Dynamics, saying that the stock has been trading on a very expensive level and they would prefer lower entry points at this point of time. And if you look at majority of the defense pack, yesterday also they were seeing some profit booking. Today also the counters have been quite low, and it's a broad-based weakness in the market as well. But going ahead, fundamentally, do you believe it does have more to sustain in terms of rally?
Loisha, if we observe the defense as a pack, many of these stocks have rallied more than 50% from its recent lows in the past 1 year. So whenever there is a consolidation that takes place, okay, these are the stocks which can expect some kind of profit picking. But in specific to BDL is concerned, the stock has rallied from its low of 900 to it touched a level of 2000 level. So at this point of time, in a medium to short term perspective, it's fully priced in. But for a longer term investor is concerned, any dip in the stock one can add. Still, the earning visibility is decent for these companies. And these stocks also comes up with a decent margin of safety, and also strong order book and earning visibility is still there. In a medium to short term, these stocks are looks priced in at this point of time. They are fairly valued. Any dip from these levels can be a good entry points for the investors who want to participate in the defense story is concerned. There can be stock specific action. There can be some kind of pockets where these companies are carrying exorbitant valuations. One need to be very stock specific with respect to the defense is concerned. And the large cap space in defense is concerned, names like HAL, Garden Ridge, Cochin Shipyard, Mazagon Dockyard, or BDL are concerned. Any dip one can add for a medium to longer term perspective.
Okay, okay, all right. Kranthi, and how are you finding the realty space? Because yesterday we saw some good pre-sales data from Prestige Estates, but for Godrej Properties, the pre-sales were below the estimates, and some of the brokerages were concerned that it could fail to meet its FY26 guidance. How would you approach the realty space at this point of time?
With respect to the reality valuations are concerned, they're fully priced in at this point of time. But we need to wait and watch how the entire scenario of the credit growth that's going to take place. Uh, there are some kind of a divergence with respect to the reality players are concerned. They're fully priced in, but what I believe in a medium to short term perspective, there is a limited upside that is there for reality stocks are concerned in a medium to short term perspective, Lovisha.
Okay, all right. Given that it's a fully valued market at this point of time, Kranthi, anything that you're finding that could actually outperform the market going ahead, at least from a medium-term perspective?
Loisha, that is a challenging task for any of the portfolio manager or a stock analyst who want to pick up the stocks at this point of time. Uh, but one need to do a cherry picking at this point of time. As I mentioned to you, the very stock specific actions, what we are finding in pharma, and as I mentioned to you, defense, capital goods, power. These are the pockets where we're looking for the opportunities. One need to be very stock specific in this market, given the kind of the current valuation picture and also the earning outlook is concerned. It's a challenging task, but still, as a portfolio manager, one need to be in the job to pick up the stocks at a decent valuations.
Okay, okay. Any sector that you believe that investors should remain on the sidelines for the time being?
What we can sense at this point of time is IT in a medium to short term perspective. There can be turbulent times with respect to the looming uncertainty of US policies are concerned. So this is the sector I would be sidelines in the medium to short term perspective. But if I want to chip into the longer term money is concerned, in a very staggered manner at whenever the stocks comes below its long term averages, that is the time would be chipping in. But in a medium to short term perspective, we try to avoid the stocks in IT, given the kind of turbulence what we are witnessing at this point of time.
Okay, all right. All right, with that, we have to let you go, Kranthi, but thank you so much for your time and we hope that we connect with you soon.
Thank you, Loisha. Always my pleasure to share.